Good morning, welcome to this weekly market update from MRC Markets in London. Today is the 15th of October 2012. All we'll do today is go through some technical analysis on Euro Dollar, Cable, Dollar Yen, Dollar Swiss and Gold. Just trying to give some sort of weekly outlook into the markets. We'll also review a bit of price action last week, just to kind of help us to predict what's going to happen this week really. So this is basically focused on technical analysis, won't focus on the fundamentals too much. For any new followers, we have 3 moving averages in each of these charts. The red one is a 55 simple, purple is 100 simple, and the gold is a 200 simple moving average. We're not making any trade calls or recommendations in this video. You trade at your own risk. If you could please read our full disclaimer on our website, www.mrcmarkets.com. Okay, and this is the Euro Dollar weekly chart. Let's have a look at what happened last week then. In terms of the candle action, let's just zoom in. Last week's candle, you could say it is a hammer shaped candle. So we have a long lower wick and normally a hammer candle, the body is quite small, but this one's a sort of decent sized hammer. But what I'd definitely recommend is to focus on is look at the wicks in candlesticks, because that really indicates what's happened in terms of price action. So you've seen in terms of last week's price action, we had a lot of sellers come into the market early on, and then the buyers came up and pushed it up towards the end of the week to form that lower wick. Okay, so still the buyers are still in the market and wanting to push the market upwards. In terms of this weekly chart, in terms of the technical side, you still have to keep in mind this trendline resistance. So I'm just going to thicken it up and change the colour so you can see it a bit clearer. Yeah, so the trendline resistance there, that's been holding since 2011. And we also have a trendline support. You draw it from there to there, from the lows to the highs there. So you see we're in that kind of tight triangular formation, and also we have this 55-week moving average. So there's a lot of indecision in the market, and that's why you can see the last sort of 5 weeks have pretty much been sideways and in between a tight range, like a couple of 100 pip range on this weekly chart. So it is really a fight between the bulls and the bears. You could say there's a lot of emphasis towards the bullish side here, and it looks like it wants to break out. I mean, this trend line's been holding for quite a while. Trend lines tend to get broken. You could see, well, in terms of last week's candle, that lower wick. So I mean, this week it looks like it wants to pop up a little bit, and you can already see that starting to happen. This is Monday morning, so it's starting to happen already in the early London session. So we'll not be surprised to see this trendline resistance get broken, but the key test will be this trend line and what happens at this level. And also, I mean, keep in mind this 55-week moving average. Yes, it is slicing right between it at the minute, but it's still going to react. Especially the last couple of weeks, it's reacted quite well. But yeah, I mean, it's quite an interesting chart. The weekly is definitely good to keep it in mind. And also another thing that is worth keeping in mind, we've spoken about it a few times. I'll just flip it over to the monthly chart. So I actually need to change the fibs there, so reopen the platform. So for some reason the default colour is yellow, which isn't very helpful. As you can see there, this is just from the Fibonacci retracements up here. Keep in mind this big 50% fib, and we're still in this move upwards. We've had this key bounce of the 200-month moving average and this 50% fib, so the bias is still towards the upside in terms of the monthly chart. But of course, that's a massive long-term chart. But just to keep the bigger picture in mind, that's a good one to remember. So yeah, in terms of bias, in terms of the weekly chart, definitely still bullish. I think. I mean, it's been due a retracement for a long time. We're now getting that sort of bounce up, which is proven on that monthly chart there as well. But that trendline resistance does need to get broken in order for that to play out. And this is the daily chart now. I'm going to keep that trendline support up. This is how I'd have my chart set up on the daily. Key to have this trendline on, in my opinion. And you can see, I mean, some people like to bring their trend lines in. I do like to bring them in. occasionally it does kind of fit the chart. And you can see today, if you bring that in a bit, especially on this 4-hour chart here, you can see how those candlesticks are reacting. And today we've already had a bounce off to the pip, and you can see, I mean, today's candle is looking very bullish indeed. That's a clear hammer candle there, so looking like we are trying to pop towards the upside there. So keep an eye out on today's highs, yesterday's highs, to see if they do get broken, which we could fly up. But in terms of the daily chart, I'd keep that trendline support up. I'd also keep this trendline resistance up as well. Still, I mean, we're a long way away from the 200-day moving average now, so if we do get any sell-off, which could happen, then that's what I'd keep an eye out for. There's no key levels. Well, key support will be just above that in terms of daily, but in terms of this week, I don't think we'll come down and test that at all. In terms of the shorter term time frames, let's just get this out of the way for a bit. So this is the 1 hour chart. The thing that just pops straight into my mind would be to see if this is a fib from the lows to the highs. So off that trendline support, lows to highs, surprise, surprise, we bounce off the 61.8, and we're starting to rip towards the upside now, and that trendline resistance is coming into play. So keep an eye out on that. This is how I'd leave my chart for the rest of the week, really. I mean, we're not going to go down to any sort of shorter time frames than 1 hour in these videos. If you want to look for clearer price action, keep on the 15-minute personally. But in terms of this week, this fib will be very interesting to see what happens here. It looks like we are going to continue to rip towards the upside. We're now above these little resistance zone here, but it's all about the resistance up the top here, and that level is one spot 29.91, so just shy of the 130 handle. We would previously come up to this level and we failed. It'd be interesting to see what happens this time, but it looks like euro dollar is getting a nice bit of momentum here, so yeah, keep an eye on that. The cable weekly chart, I'm not going to dwell too much on the technical side on there. Just purely going to focus on last week's candle. Last week's candle, quite similar to euro, there's a long lower wick there, so the buyers are still in the market. We've been saying on cable that it has been due a retracement after we had 7 bullish, 7 green candles in a row. The odds are always going to be for some sort of retracement there, and surprise, surprise, that's what we've had here. The last sort of 4 weeks we've had pretty much just pure retracement candles here, nothing drastic. I mean, I still think it's due retracement down to the 100-week moving average, but it looks like it may not come down to that. You can see already today we're starting to pop up a bit, and we've also had, I mean, briefly this morning, well, overnight in Asia, it's already come down, and that's why we formed a nice lower wick here. So very bullish price action there on cable. In terms of the daily charts, I'd keep trendline support up there. You see that's holding quite well. We also have this 55-day moving average, which is supporting as well, so a nice sort of confluence. If you want to look at any sort of shorter term buying opportunities, I mean, let's just flick it down to the shorter term chart. So this is the 4 hour. Is this a fib move from a recent bounce? Yes, it is, off that 61.8. It's similar to euro as well. It's a lovely reversal candle there for that 4 hour chart. If you're wondering how to play fibs, I mean, very simple. Just draw a fib from the recent swing low to the swing high. Look for a nice reversal candle, and then you can get in. You can see already, if you wait for that reversal candle there, you could have bought there, stops just below the lows, and you could already made yourself a few pips. So that's one way to play the fibs. And yeah, in terms of this week, I'd literally just keep it on that. See how this fib plays out, and just look for any sort of any more fib opportunities, really. Yes, that's cable done. Let's have a look at dollar yen. Very boring chart, dollar yen's been. When we do look at it because it is a major pair, but I mean, in terms of the weekly, trendline resistance is still there. Trendline support, sorry. In terms of last week's candle, similar to euro, pretty much a hammer candle, so a lot of lower wick there. The buyers are still coming in into the market. If we're going to get any sort of momentum towards the upside, we need to get above this 55-week moving average, and then we have that 100-week moving average there, which is at around 79.76. In terms of the daily, Still very, very choppy. Had that trendline resistance up there, which is pretty much testing as we speak. It's trying to break above it actually, but if we are going to break above it, I mean, if you take off that trendline resistance, immediately you can see the 100-day moving average, how well that's capping. We've had 3 clear peaks there where it's tried to pierce, where it has pierced, and it's failed to make a daily candlestick close above that 100-day moving average. So keep an eye on that. If we're going to get any sort of rip towards the upside, then we need to clear daily candlestick close above this level, and then that 200-day moving average will be in focus there. That's coming at 79.76. Let's have a look at the dollar Swiss. This weekly chart just looks identical every time we look at it, especially the last sort of few weeks. It's still about the 55-week moving average. We're still pretty much sitting on it as we speak. That's all I've really cared about on that chart. There's nothing much of interest, and they're not very technical at all. No trend lines or fibs in place. So let's have a look at the shorter term time frame. In terms of the daily, trendline support is still in play, and also trendline resistance there. So another triangular formation there. And yeah, in terms of the daily, just it's all about if we get a clear break below or above, look for a daily candlestick close above or below there. You can see the 200-day moving average is capping it. We've been speaking about how dollar Swiss has been a pure mirror chart of euro dollar. So on the euro dollar we have the 200-day moving average acts as support, and surprise on dollar Swiss we have it acting as resistance here. But yeah, that's how I'd keep my daily chart set up. Nothing massively on. I just think there's more interesting charts really in terms of, I think euro dollar and cable are much more interesting charts. If you're going to trade dollar Swiss, then you might as well trade euro dollar, because it's a pure mirror image and it's slightly more liquid as well. Let's have a look at gold. I won't draw that trend line support up because I'm sure you know where that trend line comes in, and we've really bounced off that trend line anyway now. But what we spoke about in last week's video, in fact the last couple of weeks, we've said we've been due a retracement very, very similar to cable, and we've had these strong, continuous, 1, 2, 3, 4 strong bullish candles in a row there. You have to say that the odds are due for a retracement, especially after we had such a big break, a big bounce off the trend line and the 100-week moving average around here. It's been due a retracement, and that's what we got last week, a standard bearish engulfing retracement candle. Nothing massively drastic, but still the retracement that was due in my opinion. And also we said about this key resistance around here, pretty much around the sort of just shy of the 1800 level here. Key resistance there. I'll just thicken that line up for you so you can see it a bit clearer. Key resistance there, so pretty much 1780s. 1780s key resistance there, and that's why we've got that sell-off. So the next key support I look for, I still think it's due to retrace, to be honest with you. The next key support will be that 55-week moving average. It's starting to flatten up a bit as well, and when they flatten out, they do tend to act as good support zones. So keep an eye on that. If we flick to the daily, still good to keep this in mind. It's always good in trading to keep the bigger picture in mind. That trend line support is still there. The retracement is just clear here. It does. The last couple of day candles, there's been very little lower wick there, which indicates to me that the sellers are really dominating the market now, and it looks like it is wanting to sell off. So the first key support there is the 55-day moving average. And if we break below them, we have the 100 and the 200-day moving average there. But I wouldn't be surprised if we broke below all of them and we came down and tested this trend line support, which almost it is below the 55-week moving average. So yeah, that's all. I wouldn't look at any sort of shorter term charts in my opinion, because I just personally think we're due a retracement on this gold chart. Okay then, that's all for today. I hope you enjoyed that video. Have a great week trading, and I'll catch you next week. Thanks for listening.